Here's some of the videos Meet Kevin has made recently on the market crash. 490,000 views, 340,000 views, 413,000 views. It seems like everyone and their mother is making stock market crash videos. If you notice, many of these channels have tons of views and tons of subscribers. So why are they making these videos? Is the stock market going to crash? Well, if you watch any of these videos, you might be fearful. However, the real reason that they make these videos is because they get views. This is definitely a situation where many of these YouTubers are doing something completely different than what they're warning against. If you look at their portfolios, I'm sure they have hundreds of thousands, if not millions of dollars in the stock market at this time. So obviously, if they thought a stock market crash was coming, they would not be holding all of these stocks. So that's what we're going to be talking about in today's video. We're going to be discussing why people cannot predict stock market crashes and why they have been unsuccessful in the past. And then also by the end of the video, we are going to discuss what would happen in the event of a stock market crash and how you can actually protect yourself and benefit in the end. So if any of that sounds interesting to you, be sure to stick around for the end of the video. And of course, if you enjoy the video, go ahead and leave a like because it would make me one of the happier people in the entire world.
So why is it that these type of videos are in high demand? Why are stock market crash videos always getting hundreds of thousands of views in some cases, but why are people watching these videos? Well, that's because people want to know what's going to happen. They want to avoid things like the 2000s dot-com bubble, the 2008 financial crisis. They want to know when the next crisis is going to happen so that they can prepare and get all of their money out of the stock market. I mean, it makes sense. People want to avoid these devastating times. But there's one huge problem here. It's that these people that make the videos, they want people to think that they have some kind of knowledge that everybody else doesn't have. And the fact of the matter is that's just simply not the case. The hard truth about it is that the next stock market crash, nobody knows when it will happen. Not Warren Buffett, not Peter Lynch, definitely not Graham Stephan or Meet Kevin. None of these guys know when the next stock market crash is coming. There's simply just way too many variables to be predicted here. Things like inflation, what the Federal Reserve is going to do, how the economy performs over the next 10 years. These are things that human brains simply can't wrap around. Human brains aren't supercomputers. They are simply educated guessers. That's the best that we have in our heads here. Even very smart people try to rationalize the next stock market crash. But just because you're smart doesn't make you understand the stock market, because the stock market is not something that is really understandable. I mean, look at the past year. During this whole lockdown period in 2020 on, high growth stocks that didn't have free cash flow, weren't profitable, weren't increasing their revenues, were just going absolutely crazy in the stock market. That does not follow reality. These companies aren't great companies. Great companies underperform these growth companies. So the key takeaway here is that the stock market doesn't always follow reality. It's not rational. And oftentimes, people don't act rationally. So I hope with that little introduction here, you understand what I'm saying. But now to the important part of the video. How can you prepare for the next market crash? What kind of investments will keep you safer in a period like this? Well, we already saw this year in 2021, in about February, that these high growth stocks that people were investing in had somewhat of a correction. As the total stock market pulled back a couple percentage points, these high growth stocks pulled back as much as 30, 40, 50%. I know you know the stocks I'm talking about, so I'm not going to mention them here because I might get some angry comments. But these are exactly the kind of investments that you don't want to be looking at if you're that worried about a stock market crash. So the kind of investments you want to be looking out for are things with high free cash flow, revenue growth year over year, a lot of capital to work with so that they can get through hard financial times. And I hate to say it, but boring, simple companies outperform these high growth stocks during hard financial times. Companies like Walmart, Costco, Coca-Cola, Nike, Apple, Microsoft. These are the companies that perform well no matter what the market condition is. Now, I'm not saying they won't pull back, because they will, but they won't pull back as much as these high growth speculative stocks. And I just want to mention right now, if you agree with me or disagree with me on anything at this point, go ahead and let me know it in the comments below, because I love to have conversations down there. Also, if you're enjoying the video, go ahead and leave a like. It helps me out a lot. But the last thing I want to leave you with in this video is a clip from Peter Lynch, because I think he can say it better than I can. And he's going to talk about this constant fear that people have. That's the reason that people click on these videos, is because the title and the thumbnail, they have the shocked face. They try to instill fear in you, so you click on the video. So go ahead and watch this clip from Peter Lynch, one of my favorite investors, and he's going to talk about that sort of fear.
Don't worry about, in the 50s it was depression and nuclear war. The 50s was the best decade of the century for the stock market, except for the 80s. Only slightly better. The 80s were only slightly better. People didn't expect a lot. We had an okay, it wasn't a great decade. They just didn't expect much. We made it through. And the stock market was terrific. Do you remember when oil went from 4 to 40? Remember that period? Oil went from 4 to 40, and the experts said it was going to go to 100, and all the countries of the world were going to go bankrupt. And then the big banks were going to go bankrupt, and we're going to have a Great Depression, and the stock market was going to go down, and you're going to wind up selling pencils and apples. Well, I remember when oil went from 4 to 40, and the experts said it was going to go to 100. Within 2 years, oil was at 14. The experts, now much higher paid at this point, are saying it's going to go to 4, and we're going to have a depression. And people believed it again. I remember when the money supply was growing too fast, and they said we're going to have a depression. Then it was growing too slow, we're going to have a depression. Remember the LDC debt? Remember the LDC debt, all the banks? Our banks are very smart. They lend all their net worth to Zimbabwe and Botswana and Botswana and all these countries, Chile, a lot of countries I can't pronounce. This is Chase Manhattan and Chemical and manufactures Hanover. These countries weren't doing so well. Then they were called undeveloped countries or less developed countries. Now you have to call them emerging countries. It's not politically correct to call anybody an undeveloped country. It's like I just found out the other day the term for somebody that's overweight is laterally challenged. You have to say something laterally challenged. But these were LDC debt. They were all going to go bankrupt, and we're going to have a depression. Then the Mideast was going on in the world. Remember that one? The Mideast was going on in the world. They weren't going to buy our bonds, and the market crashed, and we're going to have a depression. Then Japan was going on in the world. Remember that one? Japan was going to have all the assets, and they weren't going to buy our bonds, and we're going to have a depression. Within 3 years, the Nikkei Dow had gone from 40,000 to 16,000. The banking system was in trouble, and people said Japan was going to collapse, and we're going to have a depression. I mean, people had, on their prayer list, at the end of the day, they had eliminated crippled children and Mother Teresa, and they're praying for Japan. I mean, it's a country with a 15% savings rate, it's some bizarre, Commercial real estate, global warming, And I think as the older you get, the more nervous you get about these things. I think it's very valuable. I think while younger people are better investors is they're not worried. They haven't heard about all these crises. And they're with children. I think if you don't have any kids, you got to rent some kids for the weekend. Get a 7-year-old and ask him if he knows about the money supply, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. Or that we're 48.3 months into the economic recovery and the average recovery lasts 52.3 months. Ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds, the more you get away from 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985, the stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down October the 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. They're a bull if they take their lunch on the way to work. In fact, I knew very well the market was going to go down in October of 1987. Dave Elson remembers that. It was my first vacation I was going to take in 6 years. And we decided to go to Ireland, and we stayed at all these little cottages and play golf. And I left on Thursday after the close of trade. The market was down 55 points, which wasn't a good start, but it was down 55 points. And we got over there, and because of the time zone, we were able to do what we wanted to do and get down to Cork, and called in the market was down about 118. And I said to Carolyn, if the market goes down on Monday, we better go back. But we're already here, so I'll just stay for the weekend. So as you know, the market went down 508 on Monday, so I flew home. Because my fund had gone, I think, from 13 billion to 9 billion in 2 working days, and it was the trend here is not positive. Like I could do something about it, But there's time when they called, they wanted to say, well, what's Lynch doing right now? Well, He's on the 10th hole. He's even part of the front 9, but you know, he's in a trap right now. This could be a double bogey. This could be a quadruple bogey right here. Could blow the entire front 9 right here. You know, this is not what they wanted to hear. You know, so I have no idea when the market's going to go down, and no idea when it's going to go up. I'm totally shocked. The market was 4,000 2.5 years ago. A while ago, it's 8,000. I had no idea about this. Very surprising to me. But I'll guarantee you the market will be a lot higher in 15 years. It'll be a lot higher in 25 years. What it's going to do in the next 1 or 2 years, I don't have any idea. And if somebody in this room knows about it, they're not telling anybody. Or they're not in this room. They're down in Palm Springs somewhere. You know, they've made $1 billion. Or if they know anything about interest rates. Because in interest rates, if you can be right 5 times in a row in 10 grand, you can have $2 billion. There's not that many people with $2 billion. There's a lot of people predicting interest rates. Did you ever think about that one? Just 5 times right in a row in 10 grand, $2 billion.
I hope you guys enjoyed that clip from Peter Lynch. I think he said it much more eloquently than I would have. So what are the key takeaways from this video? Don't buy into the fear of the stock market crash videos, the articles, those sort of things, because nobody knows when the next one's going to happen. The best thing you can do is make good investments into good companies that have potential for the future. Other than that, I hope you guys enjoyed. Please consider liking, it helps out the channel a lot, and also subscribe so you never miss another video like this. Other than that, this is Gardner Investing.